Today, we're going to talk about the form of business organization that you might choose to use in running your particular business. This is after you've come up with your business idea and business model. This becomes an important consideration and can, in fact, make a big difference in how successful your business will be. Traditionally, there have been three forms of business organizations, beginning with the sole proprietorship. As the name suggests, the sole proprietorship is where one person owns or controls the entire business. Like all of these forms, there will be advantages and disadvantages to each of them. The major advantages of the sole proprietorship is that one person makes all the decisions, is in control, and also receives all of the income. So that can be very, very lucrative or very much of an incentive for someone to choose this business form. There is no major startup costs usually. Now, if you're in the food industry or in some industries or businesses that may impact public health and safety, then there will be more regulations. But in general, to start a sole proprietorship is a relatively easy thing to do. You may have to get a state or local license to do that, but in terms of huge paperwork, huge expenses in getting started, generally not so much. Another advantage of the sole proprietorship is that there's no double taxation. We'll talk about this later when we talk about corporations, but basically all of the income flows to the sole proprietor, who is taxed one time on that. There are a couple of major disadvantages of the sole proprietorship, the most obvious being the idea of unlimited personal liability. Here, the sole proprietor uh, is liable for any harm caused by the business that is the fault of the sole proprietorship. For example, if somebody slips and falls in your store, or you hire an employee to drive your truck who is in a wreck, or someone is harmed by a product that you sell, then you are liable for that. And unlimited means it's not just that they can go after the assets of the business, but the person who is injured can also go after your personal assets, your bank account, property that you own somewhere, um, cars, equipment, everything that is in your name is subject to risk here. Now, insurance can help alleviate that to some extent, but nevertheless, we all know that insurance companies sometimes deny claims and that there's no guarantee that that will happen. The second major disadvantage is that the sole proprietorship ends upon the death of the proprietor. In other words, unless provisions have been made in some other way, the business ends, and it cannot be continued simply by a child or a spouse or another heir unless some provision has been made for that. The second major form of business organizations is the partnership, very much like the sole proprietorship in that uh, uh, all of the income goes to the partners. However, there is also personal liability, unlimited personal liability, which is even magnified in the case of a partnership because not only is uh, the partner liable for his faults or the harm caused by his actions, but he's also liable for the harm or caused by the other partners. And again, this is unlimited. So even though one partner may have done nothing wrong, if the other partner did and hurt someone, the first partner's personal assets are subject to being seized and taken to satisfy any claim. So this could be a very major disincentive to use a partnership. One of the lessons here is do not go into a partnership unless you know your other partners very, very well, because they can get you into a lot of economic trouble. The third type of traditional business organization is the corporation. Here, people get together, form a business, and sell shares of stock in that business. And so the owners of the corporation become the share owners or the stock owners or stockholders of the corporation or shareholders of the corporation. The most common reason for using the corporation form, is for limited liability. In other words, if someone is harmed by the corporation, that person can only receive compensation from the corporation's assets, the corporation's bank accounts, and the corporation's property. So you, as a shareholder, have your have your personal assets protected. They cannot go after your bank account, cannot go after other property that you may have. And so this becomes a very attractive way for businesses to use this particular form. Another advantage is that if the business needs more money, it can sell more shares of stock to raise capital. Now, in doing so, of course, that limits or dilutes the ownership interest of the original shareholders, but nevertheless, it may be a way to raise significant money. The other advantage of the corporation is that it has perpetual life. If a shareholder dies, the corporation does not die. The corporation continues. The shareholder's stock passes to his or her heirs, and the corporation continues. Now, one of the largest areas of disincentive for the corporate form is that there is double taxation. In other words, the corporation is taxed by the federal and some in states for corporation income tax, and then what is left from that passes to the shareholders, where it's once again taxed as income to the shareholders. And so that can again be a major drawback to using the corporation form. Additionally, there is generally higher organizational costs as you need to get the charter approved by the state. You will probably have some fairly significant accounting issues to deal with right off the bat, and so that can be another reason not to use the corporation form. In recent years, a fourth business form has emerged and has become very popular, if not the most popular form for new businesses, and that is the limited liability company. It basically combines all of the positive aspects of the other business forms. Here, you have people get together to form a business. It can be one person who does this, but generally it's more than one. But it can be just one person to form a limited liability company. The people who run the business are called members, not shareholders or proprietors. Um, there is limited liability for the members. In other words, if the limited liability company does something that causes harm, that person can sue not the individual shareholders or members, but the limited liability company, and can only receive assets from the limited liability company. The members' personal assets are preserved. There's no double taxation. The limited liability company is not taxed as an entity, but rather that money passes through directly to the members, so it's only taxed one time. And generally speaking, there are limited organizational costs involved with the limited liability company. For these reasons, my reading of it is that most new companies, and in fact some still very big companies like Publix grocery store, for example, are limited liability companies. Facebook, I believe, began as a limited liability company, and then Mark Zuckerberg sold it and made billions of dollars by going public or making it a corporation. But for most businesses, I would think that a limited liability company is the best way to start. Again, it can be started by just one person or a small group of people. It is flexible. It is okayed by the Internal Revenue Service, and many businesses do use this form. So if I were to just as a knee-jerk reaction, if someone were to ask what form would be best, I would say the LLC is the best form. And just a couple of quick notes about some other business relationships that you may um, see. First is the franchise. This is where a company such as Subway or McDonald's owns a patent or a trademark, and then allows other companies or other individuals or other entities, I should say, to use that. So that when you go into a Subway or to a McDonald's restaurant, you're probably not going into one that is owned by Subway or McDonald's, but rather owned by generally a local company that has made a contract with Subway, the franchisor, to operate the business as its franchisee. It has to follow certain rules. It has to pay usually monthly fees, percentage of the income, those kinds of things. But nevertheless, that is a form that is quite commonly used. And then finally, the unincorporated association. This is simply where a group of people get together to do something for a charitable purpose. Well, that wraps up our little talk about business organizations. And again, uh, my recommendation is the first place to look is to the LLC. It does provide so many of the advantages that you businesses need, especially in getting started.